If you want more dividends for retirement or passive income, this video is for you. Today I have 5 stocks in Singapore to suggest to you, and the last 2 names are those that I very recently just added. So stay tuned right to the very end. Today I'll be showing you their dividend news. I'll also be updating it with latest results. So if you're keen to find out who are they, continue watching on. Hi guys, welcome back. Without further ado, let's start with the first name for today, which is Fraser Centrepoint Trust, FCT. Let me give you some big story headlines about FCT right away. Back in January 2023, they've actually bought, with their parent company, a 50% stake in Next. Next Mall, if you're staying in Serangoon, you definitely know them very well. Always very crowded. And the story about this is that when they first bought it, they shared this 50% stake. Fast forward to today, January 2024, Fraser Centrepoint Trust has actually bought their parents' half over, and they now own 50% of Next. The curious part I have as a shareholder is that previously in January 2023, 1 year ago exactly, their parent paid $509 million for their stake. But today, FCT is buying it over at $523 million, a 2.8% increment. Now, whether this increment is fair or not, or whether there was a previous agreement in place, I'm not too sure. But a 2.8% increment on paper seems still okay. So for this purchase, Fraser Centrepoint Trust has actually raised $200 million, which means they'll be borrowing $323 million for it. Now, previously, Fraser Centrepoint Trust has managed to cut down their debt equity ratio and remove all refinancing obligations for financial 2024. That to me was a plus. But with this purchase coming in, their gearing ratio is going to go up again back to 41.6% if I calculate it correctly. That makes them very sensitive to interest rates once again. But there's some good news. Firstly, this new placement of $200 million was very well received. It was actually 2.5 times oversubscribed and sold at $2.18 each. That shows strong appetite. Other key updates about FCT include their good progress shown in Tampines 1, which should come on board in second half 2024. This will add on to the bigger contribution from Next and Waterway Point, which means also that it's likely that Fraser Centrepoint Trust FCT's dividend for this coming year should exceed last year's 12.15 cents. That means the dividend yield right now is about 5.3%. Let's move on to the second name for today, which is not a REIT but also in real estate. This company is LHN. LHN is dual listed in Singapore and in Hong Kong. It's a small cap name, and just in case you haven't seen too much about it, let me show you some of its brands. This one over here on the left, you would see when you drive along AYE. This is its commercial segment. The middle segment is actually its biggest contributor, which is the industrial segment. They make monies managing light industrial parks for tenants. The third one on the right is where it's growing its revenues, and that is none other than its residential segment. If you look around more closely, you would see the Hollywood service apartments getting more and more. And right now this is fast growing because the rental rate in Singapore is just so sky high expensive. Beyond that, they also have facilities management, and this was previously where it derived most of its income. They provide cleaning services and car park management, but as this one has been shrinking, they've been focusing resources towards its residential segment. So if you like a full breakdown of LHN, do press a like, do press on subscribe, because if there's enough for you guys liking such content, I'll produce it for you. Current dividends are 2 cents excluding its special dividend, which equates to about 5.7%. But that's not all. Let me share with you something interesting about LHN, which actually gave its share price a further small boost very recently. LHN subsidiary has actually recently won a contract with MOH to build lodging facilities for at least 700 of healthcare staff. This will commence operations in second half 2024, and hopefully this could be a new high growth area. So if you'd like to trade or invest into LHN or just now Fraser Centrepoint Trust, check out our sponsor for today, Tiger Brokers. If you're curious how to invest in REITs, ETFs, funds, Hong Kong stocks, US stocks, Singapore stocks, and Australian stocks, check out our sponsor today, who is Tiger Brokers. Right now, they have a sign-up offer worth up to $888. Now these are the sign up opening rewards. Firstly, you'll get unlimited commission-free trades for Hong Kong, Singapore and China A stocks for 365 days. Unlimited commission-free trades for US stocks for 180 days. That is why Tiger Brokers is one of the lowest cost brokerages we have right here in Singapore. Use their platform and you can save yourself a lot of trading fees. In addition, you can also activate this auto sweep feature on Tiger Vault reward, and for 30 days, you get your interest boosted to 8% per annum for the first $10,000. What you need to do is within one business day, sign up and activate the auto sweep feature on Tiger Vault, and the system will automatically issue you an interest coupon for the calculation of the interest boosted to 8%, and it will be credited to your rewards center. Quick reminder again, do not press pause on the auto sweep. And to activate your reward after receiving the interest coupon, subscribe to the selected Tiger Vote funds listed below within 14 days. Save some of your monies over here and get that extra interest. In addition, if you deposit $300 and more, you get $10 of Apple fractional shares. If you deposit $1,000 and more and complete 5 buy trades, you get $30 Apple fractional shares and one sure win draw attempt that will get you more fractional shares between $8.80 to $888. As an extra sign up bonus for new users using my code JoshTan TAP, you would get an extra $30 Tesla fractional shares if you deposit a minimum of $1,500 within 7 days. And last but not least, you can actually start small using Tiger Brokers. You can dip your toes in the US stocks with as little as $1. Look for my links below, and thank you again for supporting the channel. With that, let's dive back to today's discussion. Third on the list today is Mapletree Industrial Trust, MIT. Now, if you've been a fan of this channel, you do know that Mapletree Industrial Trust is my biggest holding right now in my portfolio. If you've been driving around PIE, you would have seen some of their light industrial parks. But the story about Mapletree Industrial Trust is definitely not that. It's definitely in the data center space. This chart over here shows that majority of its data centers are in US, but actually they recently made purchases of data centers in Japan. Dividends for Mapletree Industrial Trust hopefully can get back on the upward trend, and as you can see in this chart over here, the recent reading was at 3.36 cents. My rough estimate for financial 2024 will be around 13.45 cents, and at current price is around 5.5% dividend yield. I've actually sold away my HDB flat to make some purchases into it, and if you're curious, check out the links above and towards the end of this whole discussion. With that, let's move on to the fourth name for today, which is Escort Trust. Escort Trust owns apartments and hotels like this one that you see at Clarke Quay. Latest news has been very positive for it, and the title reads, Dividends per share rises 16% year on year. If you'd like to see a full breakdown, you would realize that it collapsed in financial 2020 due to COVID. But as we know, hotel room rentals are just getting so expensive, revenue per room has now climbed above pre-COVID levels already, making new highs in Australia, Japan, Singapore, UK and US. On the other hand, China and Vietnam are still not there yet and are still making improvements, so in my eyes, there is still further room to grow. But I'd like to adjust this 6.57 cents because there were some extra payments previously. The latest last reading is actually 3.095 cents, and if we were to annualize this dividend rate, it will be around 6.2 cents for the entire year. There's still a very delicious 6.5% dividend yield if you were to buy into Escort today. If you'd like to see a full breakdown, I'll also leave links above for you to follow on. Now, if you have any questions, leave them in the comment sections below. And with that, let's move on to the fifth name for today, which is Genting Singapore. Let me start by sharing with you why I'm excited about its prospects. Recent results for MBS via Las Vegas Sands has shown that gaming revenues has grown by a big amount, a 61.7% for MBS. Non-gaming revenue, which includes their convention hall and their rooms, have kind of remained flattish. But in total, MBS has seen a growth in its quarterly results. Genting on the other hand will only report results on 22nd February after trading hours, and is widely estimated to do well based on what is seen in MBS. Not just that, there's a further good news about Genting Singapore that came out recently. I don't know if you've seen this, but China and Singapore have inked a visa-free travel. Chinese tourists have really not been coming to Singapore too much, and this visa-free travel will definitely spur more Chinese tourists to come over here. I've actually bought more shares of Genting recently. Check out our sponsor for today, Tiger Brokers, especially with their new sign-up offers. And I'd like to invite you to this previous tutorial I have on why I've actually picked Genting to be my top dividend stock previously. If you haven't seen it, check it out, and I'll see you there too. Invest safely as always, take care and goodbye.